Hi everybody, welcome to Talking Automotive with Mark and John. My name is John Sinclair and my co-host Mark Pellavestra.
Hi John, today we've got Brendon Green. Brendon Green is a industry oracle when it comes to used car remarketing. There isn't anything about the used car market that Brendon doesn't know. So he's got some fantastic information that he shares with us on the market, what he's seen with COVID, and where he predicts the used car market will be this year.
Yeah, Mark, some really interesting stuff came out of him, and especially how quickly the used car market's kicked back. So let's jump into the show.
Brendon Green is the GM or General Manager for Motor Vehicles at Pickles Auctions Australia. Now, Brendon is a 25-year career veteran at Pickles. So Brendon, great to have you on the show, and thank you for sharing your time and sharing your insights into what's happening in the used car market.
No, thanks, Mark and John. I appreciate the opportunity to come and share, what we know about the used car industry. We are in a unique position that we get some good insights along the way. So happy to share that with some of the followers of your program.
Brendon, thanks very much for joining us today. It's a great opportunity and to have someone of your caliber on the show, especially someone who knows so much about the used car market. We really appreciate your time today. So thanks very much for joining us.
No, thank you, John. Appreciate the opportunity to come and chat with yourself and Mark. And just happy to share a few insights about the used car market. It's sort of been it's been a fair bit of activity in there and over the past 3 months in particular. So it's good.
Yeah, and I think there's going to be a lot of opportunity for dealers, especially with COVID and things changing at the moment. So I think it's really ideal time to talk to someone, such as yourself, to understand exactly what's happening, because time is crucial at the moment. So.
But what we're keen to do is we talk about what is the old normal.
Yep.
What was the used car market? What were the dynamics of it? How it would run up to Christmas, then Christmas to Easter, and then Easter change, and then what we're starting to see this year where it's different.
Yep, absolutely.
There are those that still think things are going to go back to 100% normal.
Yeah.
I reckon we're going to run out of stock. I'm still convinced that there's just not going to be enough people. Listen to what Shorty said in his, that there's dumping going on, but they're not getting any additional cars.
Yep.
If the leasing companies are extending leases,
yep,
they're not replacing cars. So when are they going to get rid of their cars? And I reckon we're going to have a shortage come the end of the year.
Yeah, look, I think you're right. We're already starting to see, lower stock volumes at the moment, so than we've traditionally used to, and a lot of some of our business, a big percentage of our business is aligned to that fleet management side. So there's been a lot of lease extensions going on from their perspective. So I think there is likely to be a shortfall of good quality used car stock in the near future. So
yeah. Yeah, Brendon, maybe just as a starting point for the listeners to get an understanding of the market, can you maybe just describe how the market has been structured pre-2020? So how it normally would operate in the first 6 months of the year and how it would operate in the second 6 months of the year, and so the basic structure of the market. If you can just fill us in on how that works.
Yeah, sure. Look, it's quite seasonal, I suppose. So every year there's a fair bit of normality, typically pre-2020, to the way in which the used car industry would operate. It's always usually a fairly competitive quarter up until from January through to Easter, I suppose, into March. And we see, for whatever reason, people like to update their cars in that first quarter. And so it's a fairly strong used car market. Then traditionally, between Easter and June, the market starts to decline. Obviously, post-Easter or around Easter, there's not a lot of buying activity, which I think is why, it starts to change at that point. And then the run into June, you start to see a lot of end of financial year offers by the new car sellers, which puts, if there's strong new car offers in the and discounts in the industry, well, then you will see a lowering of the used car prices into June and July. I think traditionally those offers used to be in June, but they sort of started in May and ended in July somewhere. I think they just kept getting extended out. But then, post July, we start to see improvements in the market through August, September, October, and it gets reasonably strong up until about mid-December. And then after December, between mid-December to Christmas, it starts to tail off, and then the cycle starts again. A lot of activity in January with people getting, for us having auctions. A lot of people have got time on their hands in January, so they get to the auctions and come and kick the tires and have a look. So that's the typical cycle of a pre 2020. Quite different this year though, as you can imagine.
What's actually happened now? How would you describe the January to March pre-COVID? Was it different to any other year? And then April lockdown, and then what's happened in May, June?
Yeah, so it was a little bit different. Obviously, we had a lot of bushfires in January, so there was probably a little bit less interest from people, just consumers, I suppose, coming, and probably even dealers. And if they've got lower inquiries, there's less activity, I suppose, with us. But people were a little bit preoccupied with the fire situation, as you can imagine, and that probably lasted for the early part of January, and then out of January into February and early March, the market was going really strong. We typically find, and it always seems to happen when the new car market is soft, or the new car sales aren't particularly strong, used car prices are fairly inflated at that point in time because people are gravitating to a used car. So we had a very strong first, call it almost quarter to mid March, at which time everything changed when sort of COVID started to be announced more, and people started to become more captivated by buying toilet paper and not updating the Toyota, if that makes sense. So we really saw a massive change at that point, and then so into March everything was normal, and then it really changed. We saw a huge exit of dealers just coming and buying, in mid-March. We saw, so there was just very little demand. I think there's little demand because we're all concerned about ourselves from a health perspective, what we were doing as a family unit, etc., and very concerned about that rather than updating the family car. And people were concerned, for their jobs and the like. So there was just that demand just instantly dried up for vehicles, and I think we saw massive change at that point. Then during that, so at that point we really saw things like clearance rates drop from 75% down to 25% at that point in time, which was huge, and and a really material change to what vehicles were selling for. 20% reductions, 15% reductions in the sale of vehicles, which was massive, and that really continued all through that April period, I guess, into Easter. And it wasn't really. It was interesting. We didn't not I just said before about Easter being a challenging time, but normally that week of Easter, it was like people started to wake up and say, okay, right, we've been locked down for a while, but now we're starting to get our, we're starting to learn to live with COVID potentially, or live with the risk, and I've still got to live my life and get on with things. But so during that time, we started to see an increased participation from some of the dealers because they'd had increased inquiries, and likewise from our semi-retail fixed price offering, we started to see more consumers coming in and buying from us directly at that point in time. And then post-Easter, every week, we just started to see incremental increases in activity from buyers right through until the end of May, where we've now seen most used cars return to be equal in price to what they were pre-COVID. So, which was quite surprising that it recovered just so quickly. We thought it was going to be a lot longer tail of recovery, to be honest.
Wow, that's a real V-shaped recovery in the sense of the economy. So that's good signs. Interesting, John. If you look back to one of our earlier podcasts, I think we were predicting that. So that's not a bad prediction that we said the used car market was going to be a recovery. So Brendon, thank you for your validation of that hypothesis that we were right. With that, the demand now, since the V bounce has kicked in, what's the demand been for? Is it for SUVs? Is it pickups? Is it vans? Because we're coming at the end of financial year. And what's happening with small cars, large cars, and luxury? So there's a whole heap of questions in there, but I'm just keen to get an understand of what the demand is by brands and models.
Yeah, sure. Probably the models is easier to talk to, I suppose. What we saw for the first segment to bounce back was the light commercial vehicle segment. So, utes and vans. And I think that was, to be honest, some of it can be attributed to some of the government stimulus on that instant tax write-off. So the tradies getting in, or the couriers getting in and buying, light commercial vehicles. That was the very first segment that got back to pre-COVID pricing several weeks before the passenger and the SUV segment, to be honest. So there was a lot of adoption of that straight away. The next segment was probably the small cars, or the passenger, I suppose, and probably focusing on the small and medium type hatches and the like, where I think people started to say, okay, I might only have one car in the family. I'm not convinced that I can jump on public transport for a period of time. I think I want to go and buy a $12,000 or a $15,000 Corolla, Yaris, Mazda 3, whatever it might be, just, for a period of time. And I might spin it off in 18 months, but I'm just not sure jumping on, in Sydney, public transport capacity is at 30% of what it could be, right? So, people are just concerned with, I think for health and safety reasons, about using public transport. So I think that, that sort of drove demand for that small car segment. And then SUVs were probably the last segment to recover. But they're now back in line as well as of the end of May to be equal to pre-COVID pricing. So they were kind of the three steps. And along the way that we sort of saw, prestige is probably, and luxury is probably the last segment to move, because we've got, as you can imagine, a more expensive asset. I think what happened, we saw it out the back of the GFC as well, is mums and dads and consumers don't typically want to spend a lot of money if there's tough economic times. So they're less convinced about going and buying a $45,000 car. And if they can just buy a $15,000 car that does the job, they're more likely to go and do that. And so I think that's why the dealers have seen, an escalation of used car inquiries, and why it's tough in that new car segment still as well. So it was the same in the GFC, and we thought it was going to be exactly the same out the back of COVID, because people just, they might be on JobKeeper, there's all manner of reasons as to whether they feel secure in their job long term. So I think some of that sort of has sort of driven that used car market as well, as to why the popularity of used cars overall. And I just don't know that there's a huge buyer base out there at the moment that's willing to go and update their prestige asset at this point in time. So I feel like that market's going to be a little bit more challenging, and it always does take a bit more time to wash through. I suspect at the end of this year, when we'll start to see more repossessions, and probably talk about that a little bit later, that there'll be some high quality, high end, high performance vehicles that are on the market because of the collapse of some entities, etc. We'll see people come out of the woodwork and look for those opportunities at that point in time. But we're not there yet, because the banks haven't started to blitz on repossessions as yet. But we'll probably cover that a bit later in the podcast.
Brendon, in terms of perspective of people buying used cars from yourselves, you've got the different buyer groups in that, such as private buyers, franchise dealers, independent car buyers. Has there been any change in that market? Is there anything different happening at the moment from who's buying cars from before and after COVID?
Yeah. So I think, like I talked about before, definitely seen a lot of tradies coming and updating their cars on the back of some of those tax benefits. What we did see during COVID was, because there was a massive exit of dealers, that between March and April, essentially what happened there for a lot of major franchises and for the independents, the buyers of those entities were basically sent on holidays and the checkbooks taken off them, so they couldn't go and update and be buying stock anymore, which is why the market went from hero to zero overnight. And so they've only really started to come back and buy in the last 5 weeks or so, I suppose. But so what happened is that mass exit of dealers allowed more opportunities for consumers to come in. So we actually doubled the volume of our sales to consumers at that point in time, just because there was probably less dealers, maybe to keep them honest, or to go and compete with them. But the volume of sales to the consumer buyers actually doubled during that time, because they were still, and the people were still probably looking for opportunities to buy, but there was just a lot less dealers. So we just saw that a doubling of the consumer buyers during that period of time, which was interesting. We saw that the independent dealers were probably that they kept buying more than what most of the franchisees or the OEM based dealers were. I suspect that there's if we think about the makeup of most of those independents, and there were still some of the majors that pulled right back and weren't buying, but there was some that might be family money or aren't necessarily aligned and didn't have the rigor that potentially others might have had in the franchise-based OEM dealers. So there was some that kept buying all the way through, and I think they would be absolutely killing it now. Those that actually bought and were hoping that there was only a short-term issue with the market, they were able to buy some cars at some very competitive, very cheap pricing, and they would be doing exceptionally well now. So there was, what we saw is the independents and they were the first ones to start to come back into the market as well. And then we started to see the franchisees and the OEM aligned dealers. So at the same time, there were certain, we sort of had to change the way in which we're auctioning. Everything went to 100% online. So we already had strong online technology, but everything was online because of the social distancing. We couldn't allow people to come on site, kick the tires and inspect the cars. Couldn't have people standing side to side in an auction room bidding on cars, etc. That meant, overnight we sort of had to change. During that time, the OEM auctions that we run for some of the major OEMs that only sell to the OEM based dealerships, they paused those sales because there was no appetite to be buying those cars, right? So it was interesting to see those sort of three segments change. But there was certainly some notable differences, but it was definitely the independent dealers came back before the actual OEM aligned dealers, and some of those obviously OEM aligned dealers are part of major ASX listed entities as well that have big corporate policies as to why they could or couldn't buy, and that and some of those have only really changed in the last couple of weeks to allow them to come back and be participating, whether they're the independent franchises or the OEM aligned dealerships. So quite a lot of change during that period, and different methodologies, I suppose, adopted by the different segments there.
And Brendon, you mentioned before about residual values and the cycle that you've seen happen with pre-COVID, the shutdown, and then now after lockdown. Can you give us an example of maybe one or two models that you could show what happened, what was it tracking at, say, pre-COVID for an ex-government car, and then what happened during the lockdown, and then where it's bounced back to now? Would you have any anecdotal information around that?
Not so much in examples, like probably more the segment type. So we've got a really strong analytics entity that we started up a couple of years ago called Datum Insights, and those guys actually came out of the residual value world within the fleet management side of the fleet management industry, and they've been able to provide us an enormous amount of data that we've been able to share with customers along the way to say, here's how the market's tracking. As you can imagine, the fleet companies, the governments and the like are really interested in, okay, what does this mean for other, for residuals long term, and right now, should I be selling? What have I got to, okay, now I have to drop my reserves, but they can't do that overnight. They might have to get a risk to sign off on that, all of these different things. So those guys have been incredibly helpful. For me, it's been less so about the unique assets themselves, but I think between the LCV, the passenger, and the SUV, that sort of 20 to 15% drop at auction was what we saw, but we didn't see quite that same drop at, say, the fixed price channels, which are our semi-retail type channels, where we're able to sort of hold those prices up because some of the customers are sort of opting to use those channels rather than putting everything through auction. So we're able to give them that blended type sales structure where they can choose different channels. So the fixed price probably only dropped something like 5%, because we'd sort of hold that up there, whereas auction was closer to 20 to 15%, and then it started to rebuild after that. Saying that as an example, I'm trying to help my son buy a ute right now. probably not the greatest time given the how good the market's going, right? But we had it was a 14 plate Ranger with 90 Ks, 4-wheel drive. It's the right thing for a first year apprentice that I'm trying to help him into. I think we'd valued it at 19. The government department had put 21 on it. It made 25 and a quarter. So I backed well away and said, I'm not going to spend that sort of money. I'll wait for another one. But that's where the market's at right now, just to show an example of how hot that market is. Something making $4,500 more than what the customer was chasing. So yeah, look, I think that's just one example in the light commercial space where we've seen that market bounce back, and some, I think, in some respect.
Yeah, Brendon, have you seen any difference? Does the fuel type make any difference? Have you seen any changes in demand for whether it's a petrol or diesel vehicle?
Not so much in the not during COVID necessarily. I haven't seen a lot. I suppose where we have seen a softening is the hybrid market. So that market was really strong with a lot of rideshare customers, getting in and buying the hybrid vehicles to become an Uber driver or whatever or the taxi industry, because there was a lot less demand in that segment. I mean, when was the last time we all caught an Uber? Because we're not flying, we're not going out to dinner. That's the reason that I would normally jump into in an Uber. And so I know, so that industry was really challenged. And so people updating those cars, for rideshare purposes was in less demand. So we saw, the differences between the premium that the hybrids would normally command sort of come back to be level with petrol for a period of time. I think that'll start to change now as things are starting to open up, and we'll be back, into Ubers again soon. And it's probably just a blip. But that was one of the areas that we saw. Diesel vehicles are still very popular in that light commercial vehicle space, and also in the SUV space as well. So we haven't really seen much of a change. I think everybody appreciated the relief of lower petrol prices during that period of time. But I haven't seen anybody jump back into the V8 large sedans that we all used to have once upon a time, because there's not as many in the marketplace these days, I guess. But yeah, haven't seen too much of an effect on the actual other during COVID around the fuel types, other than really the hybrid piece.
Has there been a migration though from if you look at just the last 2-3 years, do diesel cars have a stronger resale in, say, SUV than a petrol? Is that where you're seeing that sort of demand for the retail buyers and even the used car buyers?
Yeah, absolutely. That is still very true. And I don't look. I think the phasing out of diesel will be interesting, because the fleet managers and the governments will want to get their residuals right before that happens. I know that seems to be more prevalent potentially in Europe and other places than it might be here, but there's going to be a stake in the ground at some point, probably closer to 2030, I guess, when that's all going to change. So it's definitely coming. At the moment though, yeah, there's definitely that the popularity of diesels, I think, in that SUV segment and the light commercial segment certainly outweighs, and they do command stronger resale prices. There's not a huge gap. There is a bit of a gap at a new entry point, but that gap extends and widens, I think, when you come to the resale of those assets. So there's definitely still an advantage, I think, from a resale perspective to those diesel assets, from what we can see at the moment.
And do you have any, you mentioned the hybrid side of things, but any EVs? Do you have any info on EV demand as used cars?
Yeah, we've had a little bit, not a lot. I think what's the numbers? I think last year we sold 17 pure EVs. Like that's, we tend to see them. The occasional one will come through from a fleet company, get a couple from the governments. You tend to get. We have a relationship with Tesla as well, so we sell a lot of their some trades that they mightn't necessarily want to retail back through themselves. So we do see a few come through, and but very, very little at the moment. Really hard for, I think there's some really good, EV product that's coming through. And even when we compared some residuals from, I think, 12 months, so I think we looked at them in 2018 and then the end of 2019, we'd already, our perception of what they would make had already gone up by about 10 or 15% from a residual value standpoint, 12 months on. And I think that's just, what we have seen is that when they do come through, about 50% of them are getting bought by consumers, which is really good to see that uptake, and that they're, so traditionally, if we looked at maybe the hybrid as a comparison, it's probably a 40% uptake by consumers. So it was good to see really good demand for those cars. I think they took a little bit longer to sell because they're not everyone's cup of tea at the moment, I guess. And then we're talking about probably more first gen electrics that we're selling because they're 3 years old. But what was interesting, and it's probably they'd all done about 50% usage, 50%. Yeah, they'd only travelled 50% distance as to what the hybrid might have been. So that, and that probably speaks to some of the, the distances available on charge and the like, and where people aren't taking them on the annual holiday and those kind of things. So, but what we did see was good demand from consumers, which I think is positive both for the fleet companies when they come to lease them, or the governments as they start to get into them. But there is a good market for them. There's still an awareness, I think, and things like range anxiety and how long is the battery going to last and all of those sort of things. But I think they're slowly being overcome by the OEM standing behind their products with strong warranty offerings and strong strong product offerings. And there's just more, the Model 3 and the Kona and there's just more, the new Leaf, to the Ioniq as well. So there's all these new electric vehicles that are coming through that are this is going to be more in the market. And so some of those cars that we saw a material lift in what we thought those cars would make between 2018 and 2019. So I think as more hit the road, there'll be more awareness and better technology, better, rapid charge, all of those sort of things, longer ranges, that they're all going to add to the popularity of the used car segment for EVs down the track.
Okay. And have you seen, Brendon, as far as you mentioned the government side of things, but even just nationally, is there a variation of what's been happening across Australia from a used car perspective? Generally, in general terms, but also post-COVID, have you seen some states rebound better than others? And is there any idiosyncrasies that you're seeing across the country?
Yeah, I think one of the most challenged states was Tasmania, actually, because Tassie was flying. I think they recorded more new car sales last year. They were the only state to have a lift from memory in 2019, but being heavily tourism based. I think things stopped pretty quickly in Tasmania, and that was probably one of the last markets to bounce back from a used car standpoint. I know I had a call with the Tasmanian government the other day, and we're now back at that pre-COVID pricing, whereas Sydney and Melbourne, very strong markets, and even Adelaide for that matter, strong markets, big appetite for vehicle consumption. They seemed to bounce back quite quickly. WA was not completely immune, but mining's reasonably strong in WA at the moment. That's driving their economy, and we saw some good appetite from dealers during that period of time. There was still some big independents that were buying during that time. But we sort of, and Queensland is often the state. There's so many rental cars that are returned up in Queensland. There's a huge amount of choice. Queensland's always been one of the hardest states from a remarketing standpoint and selling assets. But saying that, because the appetite was growing, everything is online. We've got dealers in Adelaide, Sydney, Melbourne buying online out of Queensland to prop that market up. So it sort of rebounded in line with the other states as well. But yeah, Tassie was probably the one with the most challenges, and WA probably held itself up on the way through. But we had to do different things. So some of the governments, we were putting cars into fixed price, like I talked about before, and that was a way of keeping vehicles ticking through. And they might have reduced their expectations a little bit, but as to what they were. But it was a better result than they get at auction, and all of those sort of things. So we were kind of working with each of the customers in each of the states to sort of suit how they wanted to roll, because it's otherwise they just wouldn't have sold any assets at all. And so yeah, it was very much a state by state, because some of our vendors are obviously big national vendors like the big fleet companies, and then there's others that are, you know, New South Wales government and Victorian government and South Australian government. They're very state based. So being reactive to what that state was feeling was important, and important to them as well.
Brendon, following on from what you said there, in terms of your major fleet market, your government, your rental, your leasing, disposals and that, are you seeing much difference between those markets, or are they approaching the market differently at the moment? And then also repossessions and that, because that has a big factor going forward. Are you seeing much of that?
For sure. Yeah, look, each government was a little bit different. Some were happy to just keep going with the auction methodology and meet the market, and then others sort of pulled right back, took some time to adjust their reserves to then meet the market a couple of weeks later, and others sort of utilised fixed price selling during that period of time. So it was a matter of having conversations with each of the government departments, that's for sure. And so the governments, and now they're all sort of back, and there's no dramas, but it did take a few weeks for them to sort of cycle through, and just to adjust to the market. The fleet companies there was a bit of a mixed response there, where some wanted to meet the market through auction, others wanted to utilise fixed price, others wanted a hybrid approach of fixed price and auction as well. So you know, they've worked. They've probably been working with their customers about extending out those leases and looking at, you know, inertia rental and 6-month extensions and 12-month extensions. And some of that's driven by the corporate just saying, hey, I'm not in a position to be able to say I want to update my fleet yet, because I don't know what the right size of my business is moving forward. So therefore, it's easier to roll it out. And I think from a fleet company's perspective, they were keen to not have a lot of cars come back in a time when it looked like the market could be depressed for quite some time as well. So, you know, I think it was an easy. So I think that'll be interesting to watch them over the next couple of months, because now the market's going bananas. How do they then come and capitalise on some of that and get stock back from customers that they've already put in their week's extension? So we'll probably see. I think we're going to see lower volumes of lease vehicles come through for the next few months, but you know, it'll be interesting to see if they start to change that up now that the market has rectified itself. Rental cars, Steve had a bit to say on that too. I think most of them have they're all trying to understand what the right size of their fleet looks like now, given that there's lower demand, and it will probably be lower demand for a little bit of time. I think they're looking at extending out the life of some of those assets as well, so it's they get that right. And then they've been trying to sell down some stock as well during this period of time to sort of get to the right stock. But there's not a lot of them. None of those segments are, like you said. The governments are still sort of updating the cars and trying to do the right things. Work with the local dealers and their suppliers about updating cars where they can. Some sort of paused and didn't update straight away, but they probably will go back and start to work through and do that now, given the market's right sized itself. Who else? Finance repossessions. Yeah, so the banks did the right thing. They all went into a moratorium of repossession and chose not to repossess. They've got a lot of customers that are in a hardship situation, so they don't want to be on a current affair repossessing a car of someone with COVID and all that. It's not a good look. So they all sort of paused on repossessing cars and working with the customers. But I suspect that we'll start to see over the next couple of months that start to ease. And someone that was delinquent 3 months prior to COVID is probably not still in a position to be able to pay that loan. So, you know, it doesn't make sense to actually do it, start repossessing at a point in time. They'll have to start to think that through at some point. So yes, we've seen very minimal repossessions during COVID, but I suspect that'll start to step up a little bit. I don't know how serious the volumes are going to be for repossessions, but it will be. There will be some repossession volume that will start to come through in the near future, I think, or more towards the end of this year.
Oh, so it'll be interesting times come September. So if JobKeeper stops, whether the repos increase or If I'm hearing what you're saying, September most likely we'll start to see an uplift or uptick in some of those repos. Now, does that have an impact? The last one I was kind of asking a question around is that premium bit again, or the prestige and premium market. That seems to be the slow one to rebound. How do you, can you see it rebounding, or can you see it being a bit of a slower walk for that one?
Yeah, I just think the price barrier is, it's obviously more of a niche market, that prestige type and luxury type asset. It does. There's always buyers at the end of the day. There's always people with old money that's not affected, in economic times like this as well. So people will take those opportunities when we present those assets to come out of the woodwork. But I think I know it's been a challenge for some of the prestige dealerships to secure good wholesale trade prices on, people that come in with a secondhand C-Class or something with a European badge on it, which are typically the cars we're talking about most of the time, aren't they? So that's just been a challenge, I think. So I think it's going to take some time to come to fruition, but there's always a buyer at the end of the day. And when we put on big auctions and we promote them well, we create that competition. A lot of those buyers, we actually get I think about 70% of our prestige luxury buyers in those big luxury sales that we have are consumers that just come and want to come to the source and buy those cars. So, but there's strong competition from the trade buyers that come in there as well. But those higher end assets, we're expecting to see more of them towards the end of this year that get caught up in corporate liquidations and corporate insolvency matters. That's typically where you'd see a Ferrari badge or a Lamborghini or a Bentley or something come through. We sell on behalf of just about all the banks and all the major finance companies. So they will all have, I don't think there'll be the amount of those high-end assets that we saw maybe out the back of GFC, because a lending criteria is tightened up so much. But there will be some that will come through with some flashy badges that will, no doubt, and just some of that mid-tier prestige that will come through as well. I suspect the prices that we will achieve probably by the end of this year, that might be the last market to start to correct itself. And by the end of this year, I suspect that will start to normalise as well. It'll just be a slower burn. Out the back of GFC, it took 18 months for prices to recover from what they were from their reduction, right? So it's quite a different, for us to have recovered in 8 to 10 weeks this time around, as opposed to 18 months, we're kind of still shocked. We actually thought it was going to be a slow burn, slow crawl back up until the end of this year. And that's when we see a normalization of some of the pricing. So we've been a bit shocked with the speed and the rapid recovery that we've seen. But yeah, I suspect prestige assets will probably take some time, and it'll be a slow recovery for those assets over the next few months.
Now, but that leads into my next question. This is where you get your crystal ball out. So you've got a lot of data now, and you've got a lot of experience. You're talking GFC and seeing what happened then. Yep. What's your forecast for the rest of 2020? How do you see the year panning out?
Yeah,
in the used car space, but specifically.
Yeah, sure. So I think we're expecting lower volumes June, July, August. That's going to mean that the market is going to be fairly, with lower volumes in the used car market, will mean that the used car prices will stay fairly buoyant, I would have thought, for that period of time. And I think for, I think unless there's another outbreak, we should see a fairly normal market through to the end of this calendar year is our gut feel, and then some normalization next year as people start to learn. Because there are some challenges in some other things with some challenges in with new car supply coming from overseas. Again, people are possibly not wanting to wait on a new car, so they're going to opt in and get a used car. Again, that's going to keep those prices a little bit buoyant. People aren't likely to travel overseas for a couple of years. We're hearing that, that's one of the reasons consumers are buying, is that they've got a budget. They normally set some money aside for overseas travel for the next couple of years. They've got, they'll utilize that to update their car. there's the opportunity for people to pull money out of superannuation. We're hearing from dealers that it's the way people are funding some of these cars as well. And I don't know that I'd be giving that advice to crystallise a loss on a highly depreciable asset, but that's what people are doing because they've got access to those funds, right? So, so we're hearing all, and I think that the announcement that the instant tax write-off for the tradies is going to keep going until the end of this year. That's going to keep. I was a bit nervous that LCV pricing might really drop post 1 July if that all got turned off, but that's been extended. So I think that's going to keep that market up. So and I guess the question might be if JobKeeper gets pulled, if the government had a change of heart in terms of JobKeeper potentially, that might upset the way in which the market reacts. Because I think when JobKeeper rolled through, that was around that Easter time when we started to see some more stability in that market and more interest in the market overall. So I suspect there's quite a few factors at play that are keeping that market buoyant, but I feel like it's going to be reasonably smooth in the if not probably used car prices will be high just because of the lower volumes that we're seeing for the next few months until the back end when we'll start to see a few more assets come through again. So again, we're just even internally trying to right size. Okay, what does that mean for us in terms of the number of cars we put to sale and how much stock we're carrying and all those kind of things to make sure we've got the right size within our business too, to facilitate the demand from dealers and consumers, and when they, how and why they want to buy, all of those sort of things.
So really, from your perspective, you're saying it's the challenge to actually get the stock. So you want to get your unfair share of all that stock to be able to move into the network and also sell to consumers.
Yeah, correct. It's a balance, but we understand. I guess we're fortunate that we're not just a car business. Cars is a big part of what we do, but so annually we do a turnover 2.6 billion in asset sales, of which 1.2 is cars, and then you've got salvage vehicles, and then you've got truck and machinery. So we're fortunately not beholden to just that one segment. We got a good risk spread, as we do within the motor vehicle segment, where we've got OEM, government, fleet, finance, repossession, and not for profit, and others as well. So not every segment is in line. So when the banks say, okay, we're not going to repossess anymore, we've got other government and other contracts to keep filling us up as well. So yes, likely that there's a few of those segments that will be fairly light on in stock. We're hoping it rebounds quite quickly, but we're just not sure that it's going to be the case for a couple of months. We might just have to batten down the hatches a little bit, but it's nice that we've got other businesses that support the motor vehicle, our motor vehicle side, if it's not quite as buoyant as we'd like it to be.
So Brendon, from your perspective, what would be your advice for dealers and OEMs and from now going forward? What should be the things they should be doing to find opportunities in the market?
Yeah, I think it's a really interesting question. I guess speaking from our perspective, what we like to do is communicating with your customers is the key, right? So might be challenging for the dealers talking with some of their customers, but not necessarily their fleet customers. They've got good opportunities there, but understanding what they need and what they want, and looking for partnerships, I think too. So where can you be a little bit different in the market? What offers can you put out to your customers? We surveyed a bunch of dealers on the way through because we want to understand during COVID what they were feeling, and so we could potentially look at offering different things to them, and the way in which they wanted to buy cars. So being in touch with your customer, I think, is really, really important, and understanding that. Utilizing your data analytics teams as well. So having a look at the trends and what's happened in tough times, and how did you, what was the end result of that, and how can you manipulate your business or change your business to align with what is likely to be a challenging time. I find that, I've done so many different shared information sessions with customers, showing them some of our lead indicators to help them understand what's happening. And so And I typically find when I share information, I get really good information back at the same time, which makes me think, okay, I'm going to pivot, or I'm going to be able to head down this path because of that sharing that information. So I think a lot of people often we all try and keep our cards close to our chest at some point in time, but sharing key information, you often get good information back from your customers in particular. And so that's what I've found. And not that I'm then blabbing it to everybody, but I'm able to, manipulate how I have that relationship with that customer to suit them potentially, or, make decisions that allows our business to perform and suit them as well. So I think those quality conversations with your customers is really key. Tough for dealers that are consumer facing. I get that, but for the OEMs and the FMOs in particular, I think that's really relevant for them. I think for dealers, if you aren't some are heavily aligned to the new car side of the business, that's a challenging market to be in right now. There is really good opportunity in this used car side of the business, and we've had conferences. I've had conferences with Mark in the past that are specifically on about used cars and how to perform, and every OEM has a superstar used car performer typically. They are full of information and they make a good money out of that, and that's why they go after that part of the business. So, if you're a dealer and you're not looking closely at that used car segment, you need to have a look at it, I think, in this point in time. And everybody, like all of the accounting firms that got advisory, they've got all a stack of advice in there for how you do that. But there's good margin to be made in used cars for the dealers. And so I think that would be an encouragement, because I think it's going to be challenging in that new car segment for some time to come. I don't think there's any silver bullets. It'll turn around eventually. But I think whilst, if you're a dealer and you're not looking too closely at that used car side, or you're seeing it as not as important, then, some of the greatest dealers we have relationships with have made a fortune on selling used cars, and they still perform well in a new car side as well, right? So it's about having a good blend, I think, of both. But yeah, I think it's partnering up, it's looking at data, working with the data teams to understand that, good conversations with your customers, and then just looking for other opportunities that you can to be a little bit different in the marketplace, and and working with your customers overall, I think.
Now, Brendon, another quick one for me. Given that your advice to OEMs and dealers, I'm keen to ask a question. I'm a long-term Holden employee and passionate about the Australian product, which sadly is not here anymore. Are you seeing demand for the last of the Holdens, or is it the other way, that people are saying, no, I don't want one of those, and they're actually getting hammered as a result of leaving the country? Has that had any impact at all on Holden resale and also Holden demand?
Yeah, good question. Really good question. So we monitored this because the announcement sort of came pre-COVID. Had lots of conversations. I think for the Colorado, for instance, it's a reasonably tough truck, and there will be good demand for Colorado in the future. We saw what did we see come back recently? There's a number of I think Comcars, so Caprices and the like, and they performed really well, which we didn't expect that they might perform as well. The Holden brand has recovered in line with all the other brands, to be honest. So it's not like it's flailing just because of So when we have a look at the against the residual values for Holden, they are just yes, they dipped like everybody dipped, but they've bounced back to be resilient. So we're not seeing any huge issues right now. Potentially down the track, as assets get closer to getting close to warranty warranty just finalising. I think we did see some of the FMOs start to back off some of their expected residual values on Holden products, but they probably had to, given there was so much noise in the marketplace. But I think, was it a 7-year commitment or something, or 10? I can't remember what the commitment was from Holden, but I suppose as we get closer to that point, that's when you're going to see a deterioration of those prices. But if you're a mine site and you've got to update your light commercial vehicles, why wouldn't you jump into Colorado for the next 3 or 4 years? Because you're going to turn them over and they're still going to be, in warranty period. And, so there's certain assets that I don't think it's going to be to affect them too heavily. But then there's others that might be some of the smaller cars or some of the niche cars that they sort of came out with that struggled a little bit from a consumer appetite. Might be a bit of a challenge. So I'm not sure I really answered it, but I think there's fortunately we're seeing the used car price of Holden be reasonably stable, which is probably what everyone wants to know, particularly the Holden owners. Anybody that's buying, it's still reasonably stable, because I think there's going to be that long-term support by Holden. We don't have any contracts with Holden, and this is just my observation. So yeah, I feel like it's okay, and it hasn't been detrimentally affected through this COVID period or left out in the cold after the announcement. That we haven't seen anything significant as yet.
Okay, because there's been a lot of chatter, and there's some very esteemed operatives in the Australian auto market who have come out recently saying that they can foresee other brands looking at the Australian market. It's going to track at around 800, 850,000 units. It's probably the realistic number for maybe a year or two. And with the dollar's actually had a bit of a kick, which is great. It got back up to 70 US cents, which is a good thing. But when it's living down in the mid 60s, it's very hard for example, European product to be sustainable if your volumes are very low. And a recent article that was published mentioned the 10,000 unit threshold. If you're under 10,000 units, you're in the danger zone. So if those brands leave, you feel that their products from a used car perspective wouldn't get adversely impacted?
I think if there's not reasonably strong OEM support, it's going to be challenging to have consumers want to opt into a car that the OEM isn't overly present in Australia, or hasn't. I just think from a future parts perspective, that sense, it's a bit like the grey imports piece that was doing the rounds a couple of years ago. People, rightly or wrongly, why would you buy that if you can't get the parts? I think that's the big question for most people, is that part support and service support and the like. And I guess if you're in a town, you might be in a regional town, and that dealership is no longer there to go and get servicing, you might think twice about that brand or another brand. Major metro, probably not so much of an issue. But look, I think those niche brands will always potentially struggle to compete with the big boys, just from the saturation, the serviceability, just the brand, how high level that brand is recognized as well. And I think when you do, obviously, if you do pull out or you make moves to sort of pull out of a country, that sends some waves to the consumers to say, they'd have to question the purchase of those major assets, I would have thought at that point. But it all depends on how well those networks are set up for, and if they do have reciprocal, service rights with others, or however that plays out in the future, or the parts availability. I think that's key for those long, because most of our customers are turning cars over 3 and 4 years. So, but there's a lot of Australian car owners who want to own that car for the next 10 years, right? So it's a little bit different. I don't tend to, because we're not selling new cars, so I don't have quite the same opinion maybe as what a new car dealer would. But I think that would be a concern if you're someone that buys a car and this is yours for the next 7 to 10 years, then that might be a concern. But if you're only in it for a short period of time, less concern. If you're constantly updating your car, probably less concern, I would have thought. But yeah.
But the Holden example, at least, you're not seeing any adverse drops in A, demand, and B, in pricing for the Holden product.
Not wholesale, no. And it's look, it's been, there was a dip around when it was sort of first mentioned, and we were expecting it was going to come, but it didn't, not in a significant way. And then COVID hit, and then the whole world got turned upside down. So it's probably taken away from some of that noise, if anything else, because other things have been at play, right? So I guess it'll just depend on Holden's level of support going forward, and how that exit plan looks, and how well the dealers are equipped to service those cars going forward, as to the consumer's opinion as to whether they jump in or jump out of a Holden. So.
I've always been a fan of your symbol cars, and I was watching one just recently. I think it was the Victorian government one. I missed this week's, but last week's, and I was astounded with the demand for SS police cars with 90,000 Ks. They were getting like $35,000. And there was a number going. It was not as if there was one car. There was a number going through, and the demand was super strong. So I thought, is it a uniquely just V8 thing, or because there aren't any more V8s anymore? But I just thought that was a very strong signal.
Yeah, look, I think there's those sort of vehicles that there aren't too many left, and I think there is a little bit of nostalgia. I'm going to buy my last one. I know as soon as Holden made the announcement, all of a sudden people were buying Holdens again, and because they didn't want to miss out. I just think so those SSs are the police cars. Same in New South Wales. They're quite popular, as they are all over the country. But now we're seeing other things like Kia Stingers and others come in that'll fill that void, I guess, over time. But yeah, I think they still have a following, because that's half the people that go to Bathurst and want to turn up in one, right? So I'm not trying to typecast, but that's just what they do, right? So so I think there's going to be that following. It'll be interesting to see what fills that void completely, to be those to have those iconic cars in the future, I guess. So.
But Mark, just going back to those resale values, I think Holden's such an iconic and strong brand. It might have that strength to sustain those residual values. But I think for a smaller brand that's only selling 2,000-3,000 units, I think it could be quite challenging to see where their residuals will go, if there were any to leave. So it might be a different picture. So it'll be interesting to see what happens there. Brendon, thanks very much for being a fascinating discussion. Some really surprising insight came out there, which I didn't expect, especially that consumers maintained through the whole COVID. Their buying power was still pretty strong. So I think that was quite interesting. Mark, any questions from your side? You normally do a good summary. So.
Well, for me, the three key points from Brendon, and really thank you, Brendon, for sharing these, because a lot of always a great conversation to have with you re-used cars, because as I said, there's no one in this industry knows this business better than you. You're the go-to guy, so it just makes sense to have you on our show. But for me, I think it was fascinating, the V that everyone talked about. There's the V, the U-shape, and then there's the W staircase. But you've identified a V big time, and the bottom of the V was Easter, which is normally the reverse. Normally Easter is when the used car market stops. Used cars get dumped in and away, and they drop by the rental companies, and everything drops away. But it's gone the other way. So everyone thought about it over Easter and jumped in. So that's the first one for me. The second one is that commercials led the way out first. I think that's interesting. That's where the government stimulus really comes into play to drive that behaviour, vans and LCVs. And then passenger, all the things that we spoke of in previous podcasts, John, where passenger and the reluctance to be in public transport, and that price point of under 15,000 for a small car, because you're going to flip it and not lose much on it as a used car. You get a 3-year-old small car, it's still got probably 2 years warranty on it, and you can then move it on. I think that's fascinating. And the third one is your forecast for the rest of this year, and where you see lower volumes and the prices being pretty strong for all the way through the rest of the year, and justifiably so, because of the FMOs extending their leases. The rental cars are defleeted, but they're not putting new cars on, so they'll need stock at some point. They've extended their leases as well. So there isn't going to be this sky is falling, oversupply, no demand. The demand's there, and all of the vendors are managing it. You mentioned that the government met the market, but also look to see what they're putting back out there. They've always been very clever with what they've purchased, so they've got a lot of diesels, and you're saying diesel's still very strong. So, kudos to the government fleet managers. So really, it isn't a sky is falling at all. And the other thing, John, from one of the earlier podcasts, is that we mentioned that the proactive used car guys, if they're bold, they can jump in and pick up stock, which they did when around that Easter timeframe, grab the stock, and now they're doing okay with it because the retail prices didn't really drop. You mentioned in your buy it now prices, they were quite consistent. 5% variation. At auctions was 20 to 25%, but that's now come back to pre-COVID pricing. So it's a very, very interesting trend that you've identified here, and it supports a lot of the hypothesis that we've had yourself, John, and some other guests talk about in previous sessions. So thanks, Brendon. Really appreciate that.
Yeah, no problem. Good to talk. I appreciate the opportunity to chat with yourself and John, and thank you.
John, anything
good stuff,
from
guys.
your end?
No, I think that was fantastic. Brendon, thanks very much. It was a real eye-opener to me. I think there's some interesting stuff coming out there. And amazing how it's kicked back so fast, Mark. And I think it was your prediction, and it come out, and so I think that's really excellent. So.
I was going to say, we have been shocked. Between the Datium analytics guys and us, we thought it was going to take a good 6 months, really. Towards the end of this year, it would slowly sort of build up. So to go like that, like a hockey stick, is just beyond what we ever forecast. So, but it's good. It's really pleasing to see that. It should be sustainable from what we know, but trying to read the tea leaves the best we can.
Yeah, thanks everybody for listening. I hope you enjoyed the show and got some value out of what we spoke about today. If you liked what you heard, subscribe to us and like us on LinkedIn. If there's anything you'd like for us to talk about, please leave it on our YouTube comments or on LinkedIn. We'll be happy to hear from you. Thanks very much for joining us. We'll speak to you next week.